Karn, welcome to the show. Good to have you back. I'm sure it's been a hell of a last week, man.
Yeah, busy couple weeks, and I hear you guys are getting flood warnings, so
Yeah.
stay safe out there.
Yeah.
I will. Man, just give us maybe just catch us up. It's been about 2 weeks since we had you on last. Obviously, you guys got through, launched the RE token, the asset, as well as the tokenized reinsurance fund on Avalanche as of late. You put out some more numbers there with regards to your revenues and some of your total kind of like underlying book value. So maybe just catch us up the last 2 weeks. You know, what deals have got done, token launch, reflections. You know, have you been sleeping, eating? Yeah.
Yeah. So lot to parse there. Firstly, you know, super thankful to the team and all of our partners as we got ramped up and launched into TGE. A lot of conviction around what we're doing. I think we're probably the only DeFi protocol to ever present audited financials as part of a listing process. And so, you know, kudos to Binance, OKX, Robinhood, Coinbase, Kraken, everyone who decided that, hey, reinsurance and reinsurance governance should end up on chain. Things are good, strong start. I'm very, very happy to be kind of refocusing on growth of the business, because TGE can be distracting for anyone who's ever kind of followed along with one or put one together. And the crux of it is this is entirely about growth from here on in, right? And so hit on top line continuing to propel forward. Right now we're at about 510 million in business. We've put on about 120 million in business over the last 30 days. And so as we kind of like try to push to get to the billion premium mark, it's really helpful to have such a positive reception from the market and folks from the insurance industry reaching out to us to congratulate us and you know, we candidly be willing to work with us in a greater capacity. So all really feels really good.
Incredible to see, and you know, I think you're taking a much more pragmatic and thoughtful approach than, you know, some of your counterparts that have launched tokens in the past in this industry. Audited financials, I think, is something that we're going to see more of. So congratulations on being a pioneer on that. And you caught us in this very revenue-focused portion stream today. Like, we've been fixating on revenues. There was a couple of things that went semi-viral over the weekend around, okay, these are the protocols that are generating the most revenue. There was another post that kind of was a comment on that. It's like, okay, well, these are the ones that are passing the most amount of that revenue back to their token holders. And so this has kind of been the theme of the day. And so given that you've launched, you know, kind of in the recent days, you've got the benefit of hindsight where you kind of know what the market is valuing these days. It is revenue, and it's passing that revenue back to token holders. Could you just tell us, like, the revenue story? You know, you get this much activity, you can charge some fees. What is the opportunity or the thesis on either deploying that monetization, that revenue back into the business to reinvest it and you know, fuel more growth versus funding or you know, kind of putting that into the token or the share? And ultimately, how do you make that determination? And we'll maybe talk about the growth story for RE going forward.
Yeah, for sure. I mean, look, as an operator, I'm singularly focused on just making sure the business compounds, right? First and foremost. And right now, we're on track to do 5x year over year. It might end up looking more like 7x year over year, which is an insane growth multiple. This is exactly what venture looks for. We're in an enviable position where we're profitable. We're growing at a venture clip, and we don't require venture capital. It's kind of an interesting place to be. The underlying economics of the business for reinsurance are pretty straightforward, right? Like, we take premiums in, we invest those dollars. We expect to earn an insurance margin on every dollar of premium that we generate. And the division of economics ends up being a portion to each part of the capital stack, right? Like, the special sauce behind why we've been able to get to where we are is we stood up and said, hey, we're going to be in a market that's opaque, that people don't understand. The first loss, we will eat our own cooking. And if you're a depositor in this protocol, you are protected, and you know that if we win, you win. If we lose, you may still win, and kind of continue on from there. And so that for folks who don't know how to underwrite, like private credit or like reinsurance or GPUs or what have you, is like a really good catalyst for enabling capital formation. And so clearly there are economics that flow to these product tokens within our capital stack. The governance token itself is intended, and we've talked about this in the past, intended to emulate a market structure that's existed for 330 years at Lloyd's, right? It governs who can transact, what processes by which people can get listed, what lines of business are acceptable, how much capital needs to get posted, and it ultimately will govern a massive pot of capital, the asset management strategy behind that capital, whether it's released, who it's released to, whether it needs to grow, and ultimately the fee and revenue stream for transacting on this network. It's
Karn,
nothing,
you guys-
nothing new. Yeah,
Yeah,
nothing new in the world of insurance. Yeah.
Yeah, makes sense.
Yeah.
And you guys could have deployed this business in a more traditional way. You didn't have to use blockchain, right? There are insurance companies that operate off chain, but you guys decided to use a more capital efficient technology stack, and the market is rewarding you for that. My question is more around the token launch. Similar thing. You guys could have done this, and you could have done it on chain, but still not launched a token. You decided to go ahead and launch the token. I guess the first question is why? Why launch a token versus just having this ultra efficient, insurance company that uses, this next generation technology? Why launch the token? And further, what advice do you have for people that they're maybe not crypto native? They don't go into a business thinking, I want to do this because I want to launch a token. I just want to run a profitable business. What advice do you have for those people as they may be contemplating, okay, I want to go public, or I want to stay private and raise another round, or I might want to launch a token? Why did you launch the token when you didn't have to? And what advice do you have for people that are considering launching tokens? How should they think about it? How should they go about doing it the right way?
Yeah, so in two parts. The reason is we're building something larger than a reinsurer, right? The idea is a global capital ocean that can then be accessed by any insurance company and reinsurer in the world who has economic alignment and incentive that is perfectly correlated with the capital provider, and is able to provide the data that is captured on an underwriting step and percolate that all the way down to the risk bearer, right? It's a global capital ocean with boats that are insurance companies on top, and that needs a coordination mechanism, and a governance token suits that perfectly, especially given that we can kind of draw the direct analogy between the Lloyd's Governance Council and what should be happening on chain, right? So individual reinsurer is a big idea. A global ocean of capital that supports all insurance activity and real economic activity is a bigger idea. And so from here on in, we think about, where do stable coins go and where do digital assets go? There are $700 billion that are locked in just security collateral amongst reinsurers, right? That is a multiple of the entire stablecoin market. And every single dollar that's in insurance, or at least in reinsurance, will end up in digital asset form or on chain at some point or another. And we're at the forefront of that. You take a step further, insurance, the insurance companies that kind of paper over this entire world, that's trillions of dollars that will eventually be digital assets, right? And so there needs to be a coordination layer for that, and that made sense for us to launch a token. Clearly, it needs to make sense for your business if a token makes sense or not. Like we've seen all sorts of variations of this, from pure governance to value accrual. I would argue that it's still kind of a Cambrian explosion of folks trying things. We're starting to see a convergence on what the market actually values, but if it doesn't make very, very clear sense for your business, I would kind of avoid it. Yeah.
Karn, just a question here from one of the audience. How do you kind of differentiate this from something like Nexus, which provides this on-chain insurance? And maybe this, is a good segue into launching the tokenized reinsurance fund on Avalanche and actually using Nexus and getting a $15 million commitment from them. How do you differentiate? And then maybe we can,
So Nexus are now longtime partners of ours. And for the folks that don't know the history behind Nexus, like Nexus primarily provides on-chain coverage, right? And so they're kind of like at the forefront of that. They pioneered that, and honestly, I think they're directionally correct as DeFi and on-chain activity matures. We took the exact opposite approach, right? Instead of trying to bring insurance on-chain, we attempted and are being successful at turning on-chain capital and digital assets into something that is usable by insurance companies. And so completely kind of like different, thematically similar, but different fundamental approach. And our partnership with Nexus through the Avalanche Fund is kind of their way of participating in that as well. And so two sides of the coin, different approaches, different tracks.
Yeah. And then so you guys launched this tokenized reinsurance fund on Avalanche. What is does Nexus's commitment, does that just end up securing the smart contract layer that you guys are using for the fund, or what is their direct, like, what are they insuring?
Yeah, so you can think about Nexus as participating alongside us on insurance risk, right? And so if for them, this is like another source of uncorrelated yield. It is a direct way to get dollars of premium, and it is a nice ballast to the rest of their business, right? And so that's what it is. It's specifically on insurance risk.
Got it. Okay. Got it.
Cool.
So it's different. It's quite a bit different, and it's almost like opposite approaches. And you're kind of tapping into the capital formation capability of building on chain. Not to just come back to token side, but I have to ask, how should we think about like like formulating the thesis here for RE protocol for this year into next into the following? Like, how should we think about the growth opportunity for RE protocol and the asset? Obviously, right now, you're saying it's a governance token, essentially just kind of like this protocol token, this coordination mechanism in the future as you look to onboard more insurance companies, counterparties, et cetera. You're kind of able to kind of create this shared alignment around a single digital asset. Going forward, how do we think about the RE protocol now that it has the RE token and asset associated with it? Obviously we're in this kind of like buyback shareholder value conversation. I think maybe you're saying it's a little bit too early for that.
Well,
how do we think about the protocol, the investment thesis, the broader kind of growth story here now that we are post-token and you have this mechanism to create this coordinated kind of like group of insurers? What does that change, and how should we think about kind of like the long-term bull thesis here for something like RE protocol? Obviously not financial advice here.
Sure. Look, like the North Star is build a massive, completely transparent reinsurance capital layer that spins off tons of cash, right? The economic actions that are coordinated off of that layer, we're not precluded to, right? And so whether that becomes a passback via buybacks or a fee override for transacting on the network or performing some other useful action on the network, that's all kind of within scope, right? But the critical part is make sure the thing prints cash, right? Without that as kind of the foundational piece, everything else is moot. And if you look at reinsurers broadly, right? Munich Re, Swiss Re, Hanover, these guys are printing billions in free cash flow a quarter, and historically have done so at a very, very predictable clip. And so if you think about what does the DeFi market value, it's that kind of predictability, right? It's that kind of low volatility. It's looking for a machinery that fits really, really well with what DeFi is intended to accomplish. And our business is entirely about security collateral. Show the world exactly what you have in case certain things out in the real world happen. And make good on your promises, right? And so I think all of it is directionally correct. The critical piece is that we kind of anchor this momentum with continued growth and compounding.
Yeah. Do you guys have a view on sort of what a more verticalized product offering could look like as you build out more of this capital pool? Are there additional product offerings that you're thinking about looking at?
Yeah, so the beauty of being like a technologist in this space is that everything looks like lunch, right? So
This guy's pretty confident after a nice token launch, huh?
Yeah, but I've also kind of built insurance companies, right? So like we're a handful of people on Earth that understand DeFi well and understand the entire infrastructure of the insurance company and the regulated nature of these businesses and what's necessary to get stuff done and to grow. And so if you think about where we're at this inflection point in time, amazing. Like we're the first across the finish line to get to some scale in this capital transformer that brings in digital assets into this massive market. We've also got AI now that compresses every potential workflow that is like even remotely related to insurance. It's literally capture information at the top end, transform it multiple times, and come up with an expected value loss on what you think you're writing insurance business on, right?
Yeah.
And so there's a pathway here to like wholesale moving and acquiring large chunks of the entire value chain that are ahead of us to crystallize distribution for the reinsurance capital layer and grow the overall margin, right? The way that I think about this is like at some point or another, you're just going to have hyper intelligent computers that capture underwriting information, run the math, figure out what the expected loss on an insurance policy is going to be, write the policy, provision the capital on chain, all in one fell swoop, right? As efficient as you can get it. The way that I'm describing it is the way it's going to be. Don't get me wrong, the insurance industry moves really, really slowly, but the pieces are all there, right? And if the pieces are all there and there are willing participants and folks are just going to push and push and push, we're going to get there.
So you're describing like agentic actuaries. And
yeah, like AI underwriter God, basically.
And
yeah.
And your vision is that they're not going to have their own capital. They're just going to agentically determine the potential risk of these policies, then kind of use your capital or Re's capital as like this capital pool that they can draw from in like this just-in-time way when they need to commit that capital.
Yeah. If you think about just DeFi broadly, right? There's nothing special about the capital. The capital has like an expected rate of return and some variability around it. And so the efficiencies come from massive scale and building the regulatory wrapper and everything that's necessary to form that capital. The interesting parts become at the software layer over top of that, where now what we just described is going to manifest, right? Like that's where this is all headed.
Very cool.
Man, Karn, one of the things that we actually have heard quite a bit from, like, let's just say like large L1 ecosystems is using their treasury to acquire businesses, right? Their token trades in the billions in the past, and they have a decent amount of ownership of it, leveraging that capital that's kind of just sitting there, go buy a business that spits off revenue and that you can put on chain. When it comes from your perspective, obviously you've just kind of opened up this new capital source for RE. What would be the first acquisition that you would do if this was on your mind?
Yeah.
What kind of business acquisitions make sense for you guys at this stage? And maybe there's just not one.
Yeah. So look, I want to have as few variables at play as possible early on, right? Like right now we take in collateral, we go collect premium. We have a big pot of investable capital. All of it's at the risk-free rate for the most part when it's off-chain. We've got some partners on-chain. I don't think it behooves us at this scale to evolve that too much, right? Like I want people to feel very comfortable with kind of what we're doing. I want people to see that there's a scale track record, there are going to be no blow-ups. We're hyper-focused kind of on that. But if you look at insurance and reinsurance companies broadly, they morph into asset managers in the limit. Right? Like if you've got hundreds of billions of investable float, you're going to buy airports, you're going to go buy sports teams, you're buying fixed income you got equities.
Let us get tickets,
yeah,
man.
Yeah, and so your LPs in the largest private equity funds, your LPs in the largest venture funds, the capital finds a way to proliferate, right? That is out in the future. I'm just focused on making sure that we compound the thing now. Yeah.
Got it.
Congrats on the token
Man,
launch.
what's next? Yeah, just as we kind of come to a close, new funds, more scale, more deals.
Yeah, tons of integrations and partnerships are going to be launched over the next little while. But core to all of this is, again, just putting on more business, getting more deeply integrated in insurance, getting the industry comfortable with scaling up with us.
Love it. Yeah, man. I mean, I guess like from our end, I think for what the investor class at least in like the Twitter world will want to see is how can we get like the RE data more public and available to be able to like have like more of like this mimetic property around the asset. Now it's like, I mean, maybe it's not a fault of yours. It's a little bit difficult to find. And like we've talked about it quite a bit. You guys have posted about it. But yeah, some of that public data I think would, because like there's kind of this index being formed, right? And we're doing a lot of it. We're like, yo, guys, like this is what you should look at because here's the financials. It just makes sense. Like these things are spitting cash, et cetera. And I think
Yeah.
you guys deserve to be in there, but it's hard to make the case with that public data.
So yeah, we've got a metrics dashboard on the RE site. So that walks you through the exact composition of every dollar of our backing. It also gives you an exact view of every reinsurance treaty that we're party to. I think we're going to transform that and work with partners who act as kind of like, while we have the network firm and other folks that attest to this, like for example, Blockworks and others have products like this that generate dashboards that give a much more crystal clear kind of view into the underlying. But yes,
this is great though. Actually,
we're going to get there. Yeah, I think there's a lot there. We'll get even more nuanced.
Wow. RE protocol, man. Karn, thank you so much, man. I know you're busy. I know a little bit over, but thanks for sharing that dashboard as well. I feel silly for not having found that.
All good. And hey, guys, always a pleasure. Really appreciate you having me.
Absolutely.
Yeah, congrats on the launch, man. Best of luck in the coming months. I feel like it's the end of the beginning there, right? And there's a lot more work to do.
Yeah, it's just the start. Thanks, guys.
Very cool. Thanks for joining.
Alrighty, Karn. Cheers, man. Best
Bye.
of luck.